Dubai, right. It's like you hear that name and instantly it's all about the mega wealth, those crazy futuristic buildings, and this feeling that it's the place to be if you want to get rich quick through real estate.
Oh, yeah. Celebrities, actors, big-time CEOs, everyone seems to be flocking there, turning it into what a lot of people are calling the world capital of luxury housing, which, I mean, looking at some of the numbers, it's not hard to see why.
It's kind of wild, isn't it? Just the sheer scale of it all.
Totally. You dive into the data and it's pretty impressive, honestly. Prices per square foot are constantly breaking records. Sales are through the roof every single month, and the amount of money being thrown around is just astronomical.
Yeah, it's definitely enough to make anyone pay attention, that's for sure.
Oh, for sure. And here's where it gets really interesting, I think, especially for, for our listeners who are thinking about investing. Let's say you had like 1 crore rupees.
Right.
And you're thinking, okay, where do I put this? Mumbai, Delhi, or maybe Dubai.
Okay, I'm following.
Yeah.
1 crore rupees. Yeah, exactly. So picture this. You invest that 1 crore, and 10 years later, in Mumbai, it's maybe grown to around 1.5 crore. Delhi, maybe a little less, like 1.4 crore. But Dubai, we're potentially talking 2 to 2.5 crore. Big difference, right?
Yeah, that's a significant jump. Like way more bang for your buck in Dubai, at least potentially.
Totally. And it's not just about like the value of your investment going up over time, but also the money you can make renting it out. That's a whole other piece of the puzzle.
Right, the rental income side of things. And that's another area where Dubai, well, it kind of blows the others out of the water. Think of that same 1 crore property, right? In Mumbai, you might be looking at, I don't know, 30 to 40,000 rupees per month in rent. Delhi, maybe 25 to 35,000.
Now, brace yourself for Dubai, because we're talking 70,000 rupees to, get this, like 1.2 lakh rupees every month. It's like a whole different ballgame.
Whoa, yeah, that's a massive difference. And then there's the whole tax situation, or should I say the lack of taxes in Dubai.
Ah, yes, the zero tax haven. Always a crowd pleaser.
It's a big deal, though, right? Zero tax on your rental income, zero tax on any profit you make when you sell capital gains, and zero property tax just for owning the place.
Right.
Now, if you think about why some of India's like super rich, I'm talking Shah Rukh Khan, Virat Kohli, Mukesh Ambani, Gautam Adani are pouring money into Dubai real estate, well, it starts to make a lot of sense. I mean, when Mukesh Ambani is reportedly dropping something like $238 million on a couple of villas, something's up.
Right. It makes you wonder what they're seeing that maybe the rest of us aren't, And when you compare what you actually get for your money, that 1 crore, it's kind of shocking. Like in Mumbai or Delhi, you're maybe squeezing into a decent 2-bedroom apartment in a super crowded neighborhood. You're battling traffic every day, dealing with, well, let's just say inconsistent infrastructure.
Yeah, and in Dubai, for that same amount, you could be living it up in a luxury apartment in some fancy master planned community. You've got world-class amenities, smooth highways, and, a big one, no pollution, no property tax bills every year.
It paints a very different picture, doesn't it? But, I mean, come on, it can't all be perfect, right? There's got to be a catch. What about all those things you never see in those fancy brochures? The downsides, the risks.
Oh, yeah, those definitely exist.
Yeah.
You got to factor in things like, taxes you might owe in your home country, the risk of them building too many properties and flooding the market, and, well, let's not forget Dubai's economy being kind of tied to the U.S. economy. What happens if things go south over there?
So that's what we're digging into today, right? Is Dubai real estate truly booming, or is it a bubble just waiting to burst? Why are the ultra-rich so into it? And, most importantly for you listening, what are the hidden traps you absolutely need to know about?
All great questions. And to understand what's really going on in Dubai, we need to take a look at the fundamentals, the things that make any real estate market tick.
Okay, so back to basics. What are we talking about here?
I mean, it's stuff like capital appreciation, right? Will the value of your property go up over time? And then there's rental yields. How much can you actually make renting it out? These are the things that tell you if a market's going to thrive or, tank in the long run.
Makes sense. So let's start with capital appreciation. This is the fun part, right? The part everyone gets excited about. Let's say, hypothetically, you had $1 million to invest in property, and you split it between Dubai, London, New York, and Mumbai. How much would that investment grow each year, on average?
Well, in London, you might see an average growth of around 4% per year. New York, maybe a bit better, like 6%. Mumbai, similar to London, maybe 4 to 5%. But Dubai, that's where things get interesting. We're talking 5 to 8% growth annually on average.
Whoa. Okay, so Dubai's clearly outperforming the others.
It is, and significantly. For every dollar you invest, you're looking at a much higher potential return compared to those other big markets.
That's got to be what's fueling all the hype, right? So let's say you bought a swanky apartment in downtown Dubai back in, I don't know, 2015 for $1 million. It could be worth like $2 million today, double your money. And here's the kicker: no capital gains tax in Dubai.
Exactly. Compare that to London, where you'd be paying 20% tax on those profits. India is similar, 20% after you factor in those indexation benefits. And the US, they'll take their 20% cut too. So just from a pure profit perspective, Dubai is looking pretty sweet.
Yeah, but it's not just about, selling for a big profit down the line. A lot of investors are looking for that steady income, that passive income from rentals. What kind of rental income could we expect from that same $1 million property in these different cities?
This is where Dubai really shines. In London, you might be pulling in, I don't know, 30 to 45 grand in rent each year. New York, maybe 40 to 55,000. Bangalore and Mumbai, similar range, like 25 to 35,000. But Dubai, we're talking 50,000 to $85,000 annually.
That's a huge difference. And wait, there's no tax on that rental income either, right?
Nope, not in Dubai. Zero rental income tax. You keep every single dollar. So when you combine that incredible potential for growth with these super high tax-free rental yields, it's no wonder everyone's so interested. We're seeing investors from Europe, Russia, those crypto millionaires, and of course, lots of interest from India and other parts of Asia.
But hold on, we got to talk about the risks here, right? Like, what if they build too many properties? What happens when the supply outweighs the demand?
You're right. That's the big question and a valid concern. History's shown us that real estate markets crash, not just because of, overall economic issues, but because developers get greedy and build way too much. Suddenly, there are more homes than people to live in them.
And that's when things go bad, right?
Exactly. Prices plummet, and anyone who borrowed heavily to buy those properties, well, they're in trouble. We've seen this happen in China, with entire cities sitting empty, like ghost towns. And remember the 2008 U.S. housing crisis. Overbuilding led to prices crashing by almost 30%. It took years for that market to recover.
So is Dubai heading down that same path? Are they overbuilding? What should we be looking at to figure that out?
There are a few key indicators. One is the ratio of population growth to new residential units. Basically, are more people moving into the area than new homes being built? If so, demand's probably higher than supply, which usually means prices go up. But if they're building way too much, well, the opposite happens.
Okay, so what's that ratio looking like in Dubai right now?
It's about 2.72 residents per new housing unit. Now compare that to London, which is around 2.3, New York at 2.55, and Mumbai, which is a much higher 4.5 to 5. So in Dubai, the population's growing a bit faster than the new construction, which suggests that prices should stay relatively stable. Mumbai, on the other hand, has a huge housing shortage, which is why rents are so high there.
Interesting. So at least for now, demand seems to be keeping up with supply in Dubai. But what about how quickly those new properties are actually being bought or rented out?
Ah, good point. That's where the housing absorption rate comes in. This tells us what percentage of available properties are actually being sold or rented within a certain time frame. A high absorption rate means demand is strong. In Dubai, the overall rate is about 89%. But for luxury properties, get this, it's around 95%. So those high-end places are being snapped up super fast. New York's at about 82%, and Mumbai's around 83%.
Wow, 95% for luxury properties. That's insane. It's like people are just throwing money at them.
It does show a lot of confidence in that segment of the market, but we also need to consider, who can afford to buy these properties in the first place?
Yeah, good point. Not everyone can drop $1 million on an apartment.
Exactly. Affordability for the people living there is super important for any real estate market to be stable in the long run. And to measure that, we look at the price-to-income ratio, or PIR. It's basically the average home price divided by the average income. Lower PIR means it's more affordable for the locals.
Okay, so what's Dubai's PIR looking like?
It's around 6.7 right now. Now, that might sound high, but it's actually much lower than some other major cities. New York's is about 14.6, and London's whopping 19.5. Mumbai's even crazier, over 30.
Yikes, that's rough. So Dubai's not exactly cheap, but it's definitely more affordable for its residents than some other global hubs.
For sure. And remember, if prices keep going up way faster than people's incomes, that's a red flag. It could mean the market's overvalued and about to correct itself.
Makes sense. Now, you mentioned something earlier about the relationship between rental yields and mortgage costs in Dubai. What's that all about?
This is one of the things that makes Dubai really attractive for investors. In a lot of big cities, if you get a mortgage, The rent you collect barely covers your monthly payments. But in Dubai, it's often the other way around. Rent can actually cover your entire mortgage and sometimes even leave you with extra cash.
Wow, really? That's amazing.
It is. In cities like Mumbai, London, or New York, interest rates are usually higher, so you often have to pay extra out of pocket just to cover your mortgage. But in Dubai, you can actually make money from day one. It's a huge draw for investors.
Okay, so we've talked about the potential for growth, the high rental yields, and some positive signs regarding supply and demand. But what about those hidden dangers we talked about earlier? Let's start with loans and payments. What's the deal for Indian investors?
So here's the thing. It's not as simple as just getting a home loan like you would in India or the US. Dubai has specific rules for foreigners buying property. Under India's FEMA, Indian residents generally can't take out a loan for a property outside of India, including Dubai.
Oh, so that's a pretty big obstacle. What are the options for Indian investors then?
Well, they'd probably need to pay for the entire property upfront with their own money. They could try to get a mortgage from a bank in the UAE, but that's still complicated. And then there are private loans, but those come with their own risks.
Yeah, not ideal. Okay, let's move on to another big risk. The whole Dubai economy being linked to the U.S. economy thing. Why is that such a big deal?
Because the UAE dirham, Dubai's currency, is pegged to the US dollar. It means Dubai's economy is directly affected by what happens in the US. Remember the 2008 crisis? When the US housing market crashed, Dubai's market followed suit and prices dropped by like 50%. It took years to recover.
Right, so what's making people nervous now?
Well, the US is facing some big challenges right now, like high debt, rising interest rates, and the possibility of a recession. If the U.S. economy weakens, it could scare off global investors, and they might pull their money out of places like Dubai. That could cause prices to drop again.
It's like a domino effect, right?
Exactly. And even though Dubai has some safeguards in place, it's still vulnerable to those global economic forces.
Okay, one last thing. Taxes. You said Dubai has zero tax, but it's not that simple for Indian investors, right?
You got it. Even though Dubai doesn't tax rental income or capital gains, Indian residents still have to pay taxes in India on any income they earn globally, including from their Dubai properties. So that rental income gets added to their total income in India and taxed accordingly. And if they sell the property and make a profit, they'll have to pay capital gains tax in India, just like with any other foreign asset.
So that zero tax benefit in Dubai doesn't really apply to Indian investors back home.
Not exactly. And it's really important to understand this because if you don't declare that income from your Dubai property, you could face some serious penalties under Indian tax law. It's not worth the risk.
Definitely not. Okay, last question. The bubble trap. You mentioned that all real estate markets eventually correct themselves. Are there reasons to be cautious about Dubai, even though things seem good right now?
Absolutely. No market is immune to downturns. Dubai's got strong demand, high absorption rates, and the government's trying to control things, but it's still vulnerable to the U.S. economy. And remember, location is everything in real estate. Even in a hot market like Dubai, picking the wrong property or location could still lead to losses.
So, bottom line, is Dubai real estate a gold mine or a trap for Indian investors?
Well, it's somewhere in between, as with most things. It can be a gold mine if you do your research, pick the right property, and have the money to invest. But it could also be a trap if you're not careful. You got to understand the risks and be prepared for the unexpected.
Like anything else, right? High reward, high risk.
Exactly.
Well, on that note, I'm curious, what do you think is the one thing, the overlooked factor that could make or break Dubai's real estate market in the long run? Something we haven't really touched on yet.